Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Just want to welcome everybody here. Hope everybody's having a fantastic morning. Let's go ahead and jump into this. And also just want to give a shout out to everybody in the recording as well. Want to say hello to you and want to welcome you here and welcome you to participate in any way that you can. Feel free to ask questions in the chat box function over up in the Zoom platform in the live chat, or if you're on the recording, feel free to ask questions via the comment section. So, all right, guys, before we go ahead and get started, as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. Okay. All right, guys, so let's go ahead and jump into this. So I posted a couple of trades last night. I did get one to trigger. As far as the signals goes, I did take both trades. But here's this USD franc. So last night when I posted this, this market was right. Let me do a replay. Actually, if I do this, let me do sessions and let's do this. Oops. Okay, let's do this. Yeah, okay. So this is where the market was last night. It's like somewhere around here. This is about when I posted the trade. So a couple of things going on here. Let me go ahead and make this bigger. There we go. Okay. So last night we had on the USD franc, I found a couple of things. So first of all, something that I liked as I was looking for trades is I saw that in the Sydney session, we had kind of a tight consolidation, and that's typically true with the USD franc. Like right here, you had a tight consolidation a couple days ago. This was somewhat tight over here. But there are days where it's not so tight. Like, let me see if I can find an example. Like this one's not as tight. This one's not a very tight consolidation. So I usually like to find something with a tight consolidation because what that does is it creates like a ground that's great for finding liquidity zones, right? So so I'm basically looking for the market to go to when the London market opens while we're sleeping. I want to find a area where the market's likely going to return back to, and then subsequently just go for the rest of London, basically. So, and that's what the whole concept behind liquidity is and everything. So basically, when you come back over here, the thing I didn't include in this analysis, let me actually delete all this stuff, show this out of the way. Okay, so when you come back over here, couple of things. You had a nice structure. I did not show this, but you guys already know that this is part of the system, right? So you got nice structure here. The market broke that structure. And what's the thing that caused this break of structure? It's this consolidation right here. Basically, whatever orders were placed up in this area is what ultimately created this move to the downside, this massive impulse, right? So naturally, and again, it's not 100% of the time, but naturally, if the market ever returns back to that same area that created such a substantial move, that's going to generally create a move to the downside, to the other direction, okay? Because here's what's happened. So I had somebody ask me last night to explain the science behind this concept. So here's the science for you. So basically, when the market creates a large impulse, it doesn't matter if it's up or down. If the market creates a big impulse, there's traders who are trapped in that area. Some traders are doing great. Obviously, traders who sold back here are feeling really, really, really good because they sold here and now they're making money. But what about the buyers? Well, the buyers, a lot of these guys are trapped up in this area, and so they need relief. And if they're given such relief, what are they going to do? They're going to close their position. They're not going to be like, oh, great, I've got relief now. Now let's just see if it continues in my favor. No, they don't do that. What most people do is if the market gives them back, if they went through such pain and the market goes back to the area where they got in initially, they're going to say, I can clean my hands of that. I'm out, right? That's what most people do. So that's kind of the general concept. But in more detail, here's what also is going on. So when this market's up in this area and then it pulls back, again, they're trapped traders. But first of all, you had a market that you had an actual market where buyers and sellers found equilibrium. They were fine. The sellers were fine selling to the buyers, and the buyers were fine buying from the sellers, right? And so you've got this concept going on in this consolidation right here where they're just fine with each other. And there's a subsequent buildup of positions the longer and longer this market goes, okay? So you've got a high volume of trades clustered in this area, okay? So we're diving into more of that science, right? Where do you have less volume? Well, you have less volume on things like this, where the market doesn't move as quickly, or excuse me, where it is moving quickly. Market's slicing through this area, slicing through this area, and it just continues down and down and down, right? But it spent a lot of time in this area, so there's a lot of volume there packed into that area. And it also happens to be the last area or consolidation where this market then began to pull back, right? So again, now you've got those trap traders, and if the market ever comes back to tap into that area, which it did, the chance of a pullback is very great. Now, here's what got me even more excited about last night. So basically, when I was looking at this market came up into here, and then it did not break these highs, these old highs back here, and it made these failed attempts, right? So it came up, failed, it tried again, failed. That would have been really the nicest, that would have been the best entry, right? And then I said, okay, great. If it comes back up and tries to retest this, and if it fails, then we'll go. And so that's what I did. Well, I actually technically took the trade. I took it at market. I liked it enough that I just sold it right away. And then I got in again, obviously with the signal alert. And so obviously you play this out. This one was really close. Like I barely got tripped into this trade. I recognize that there's probably some people with different brokers that maybe didn't get tripped into this trade. I get it. Like if that happened, it happens, right? I can't do anything about that. Um, so depending on the broker that you have, you would have gotten in on or not on that because it was so close, right? So I definitely had my fair share of text messages from people saying that they got in, they were really excited, and others that were like, I didn't get in. And so it happens, right? It just happens where like, here's my entry, and sometimes the market gets really close to it, triggers people in depending on the spread of that broker, and so other people it doesn't, right? So and which is another thing too. I really do want you guys to take initiative over these signals. Like, feel free to use the signals all you want. I hope they help you. I hope they provide value to you. That's why I offer them. I'm one of the only mentors out there that offers signals, and part of it's because most people just aren't good at trading. They're just not good, and they're so-called mentors, and so they'll teach you how to trade, but they won't stick their head out there and actually trade in front of you, right? So like I do want to just highlight, I'm not trying to like boast at all. I'm really just trying to highlight how this industry works, because I've been involved in this industry for 10 years. And basically, if somebody's not willing to trade in front of you, I wouldn't consider their time valuable, right? Just because it does take a lot of guts to actually trade in front of clients, right? So, but with that said, though, I really hope what my analysis provides value to you, and I'm welcoming you into my analysis and welcoming you to trade with me, right? But at the same time, I do want you guys to take initiative over some of this trade alerts I send out, and your own trade alerts as well. So like obviously with this trade, I did have a nice entry, got in on it, but for some people missed out on the trade. So but I also took my own market order too. Like I had multiple entries on this particular setup. So sometimes it's good to have your own setups as well, and your own way of taking these signals, not just literally just saying, okay, here's Steve's entry, here's his stop loss, just take profit. You can trade that way. I'm not saying you can't. Feel free to continue to do that. but I don't think that should be your only way of trading because again, I don't want you to have to do this 10 years from now where you're just copying my signals 10 years from now, right? The goal is for you to be able to go in at the market at night before you go to bed and find these particular setups before London opens, and then you just go in, take your own trades, right? But again, I hope my analysis is at least valuable to you that so that you can go ahead and start taking some of these trades on your own. All right, cool. So yeah, we had a nice break of structure in recap with this trade, a nice break of structure right here. The market returned back to the liquidity that created this break of structure. I waited for the market to come back as a signals program to get us back into the liquidity and then off to the races. And you can see right here, actually, it wasn't 4.32 or 23. This was really good, guys. Like we made 1 to 4.37. 1 to 4.37. That's amazing. So that means for every dollar one, we risked, well, I guess it was just like, well, it was less than 20 cents, right? So you have for every $4.37 you make, you risked $1 to make that $4.37, which is why, again, I really love this type of trading because if you can trade this particular way, you can afford a lot of losses. Like this one trade affords you more than 4 losses in a row, right? That's what keeps you in business. That's what helps you stay profitable. There's other people who trade there's other different, I guess there's other ways to trade out there where you could do the exact opposite, where you could risk $4 and make $1. That's not a way to trade, right? The way to do it is literally what I've just shown you right here. This is how you stay profitable. This is how you get big wins. This is how you grow your account, is to have big profits and small losses. But one of the things I really want to touch on, and I did mention this in the Telegram this morning, is a lot of people get aggravated when they see this type of trading because it's not sexy. It's not sexy. Okay. I mean, it's sexy when you win. It totally is, right? But why is it not? Well, maybe it's not, maybe that's not even the word. It's not like when you go gambling, like I've done that for sure. Like I've gone down to Vegas. Like there's this satisfaction. They're smart. These guys are smart down in Vegas. Like when you can go click a machine and just be like, oh great, I made some money. Like they're quick to give you some money back. Like they'll take your money hand over fist for sure, but they're quick to give you your money. Like they'll give you these small wins to make you feel like you're winning, right? That's exactly how trading is if you don't learn how to do it this way. Literally the same thing. Okay. So basically you need to have these big wins and really managed losses. So we have these, 1% losses or less even per trade. And then when we win, we just win so much more. And so a lot of people get aggravated with that type of trading because they want to win every night. They want to have they don't want to have any losing nights during the week, right? Some weeks I can go, like I've literally done this. You guys have seen me do this. Like I'll have weeks where I don't have a single losing day in the week. This doesn't happen very often, but like I can go the whole week without losing. I've even gone weeks where pretty much the whole week I just get ripped both ways. Like I lose every trade. The cool thing though about that though, think about that, guys. Let's say you take one trade a day and you have a week of losses, like straight up every single day you lose. You trade 4 nights a week, maybe 5 nights a week. This trade comes along on the next Monday, you're clear again. You're absolutely clear. You see what I'm saying? Right? This is the type of trading that keeps you in business, and it's also what allows you to thrive long term, right? But a lot of people quit just before they get something like this, right? Or they leave the market. Um, and I get it. Like I've been doing this 10 years, so I've had hundreds of clients come through and leave, right? And I wish them well. I hope they find something that works if this doesn't work for them. But the thing is, like, again, what other guys out there are going to trade in front of you, like, and actually share their analysis with you to take the same trades they're taking, right? And I think that goes a long ways, a really long ways, because I've been in other programs where they'll basically have similar classes like this, but they'll show you trades, but they won't actually take these trades with you. Um, right? There's a big difference between those two things. Anybody can show you trades for hours, days on end, weeks on end, but they can actually trade in front of you, right? So I think that's important. I think it's important to show both ways. And again, back to my risk management concept, it's like, again, that's how you're going to make the money, is having high reward, low risk. And just unfortunately, one of the consequences of that is you're just going to have fewer wins. You're still going to have lots of wins. Like, we're working really hard to improve our win rate. That's something that's been on my mind a lot, is like, how can I improve my win rate? But the thing is, I'm never ever going to do it at the expense of my risk management model. So I need to find ways to have more wins without sacrificing my risk to reward ratio. Never going to do that. That's like the one thing you'll never be able to convince me to budge on, ever, 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 ever. Won't ever give that up because it's so valuable, right? So anyway, this is interesting. This trade's actually coming right back up. I mean, we're obviously done, but it's interesting to see it come right back up. I think it found some demand just below this. I think it found some liquidity just below that support level. We could go check, but anyway, we're done with the trade. But yeah, I think I tapped into something too as well, kind of with liquidity. Like, something I've been doing is I've been trying to find at night these markets that are a lot more quiet. So let me show you something I did. Let me actually delete all this. So I found this, if you guys are interested, it's just something I've done in addition to what we're already doing. So there's this thing called the kill zone indicator that I found yesterday. Um, and I set it up so that it would just show the high and the low. It would highlight the high and low of Sydney and Tokyo, so the Asian session. And I'm basically going into pairs like the USD franc, Euro CAD, Euro dollar, pound franc, pound dollar, just anything that's non-Asian session related. So no Aussie, no yen, no Kiwi. So CAD, dollar, franc, pound, and euro would be my options. And you're just trying to find a market that's generally quiet, that's not moving a lot. Because what happens is when London opens, London's going to attack liquidity. It's going to literally just go and attack liquidity and then set off for the rest of London session, right? So let me show you some examples of this. So like with this USD franc, you obviously know the trade we took last night. Here's the session, I guess the high and low of Sydney. And then during the middle of the night while we were sleeping, the market came up and attacked our entry right there. It came up to liquidity and then it was just gone for the rest of the morning, right? An example over here from another night is basically this came just below the Sydney low at London Open 2 nights ago, I guess a night ago, and it attacked liquidity and then it was just gone for the rest of the day, right? Over here, similar example, this one actually broke below the Sydney low. It came back up to test liquidity formed during the Sydney session, and then it was gone for the rest of the day, right? Over here, this one's kind of interesting. This one kind of zigzagged all day on Friday. I imagine there's probably some liquidity over here. I'd have to just go to the left side of the chart to find it. Yeah, there it is right there. So this thing attacked liquidity and then it was gone. This one, I'm not sure why this one stopped right here. This one came up to here. It's probably a fair value gap, not necessarily liquidity zone. But yeah, it basically came to that and then pulled back. Interesting. So this one right here, This one was interesting. This one actually broke out a Sydney low, came back up and tested a liquidity inside of Sydney right here. It tested this liquidity zone right there. And then after that, it was just gone for the rest of the day. Right. So kind of an interesting concept. Yeah, this one did the same thing. Like here's the Sydney low, here's the Sydney high. Right at the London Open, it came up a little bit and then it came down, retested this liquidity right here. And so and got in like this little candle right here, came in and attacked this liquidity, and then it was gone. Yeah, it's super interesting. Again, right here, here's the Sydney session. The market came actually down first. I guess during New York or the beginning of New York, it came up, attacked this liquidity zone right through here, and then it was gone. So, by the way, so for those of you, because I know a ton of you have been asking, like, what is liquidity in a nutshell? And I did explain this earlier. I went over and talked about this with the trade from last night. But liquidity is just basically where there's a congregation of trades, like a consolidation, that ultimately created a move that breaks structure. That's all it is. That's all liquidity is. So like an example of this, like I was just showing you that this was liquidity right here. So if you zoom into this, this had a nice support level right here. You can see this was nice support right here. And then ultimately the market broke that support right there. So who caused it? Well, whatever happened in here caused it, right? Whatever took place in this consolidation created this break of structure right here, right? And so if the market returns back to that, there's a good chance you're going to get a pullback, right? And that's what happened literally right there. And it literally happened again right there, right? So that's liquidity, right? And that's called supply side liquidity because there's a lot of sellers pushing that down. You're basically the market's going to go up and hit supply. Okay. This is interesting. I just find this so interesting. Like this is the Asian session right here in this blue, and the market broke just below the lows of the Asian session. As soon as it did that and tapped into this liquidity right here, gone for the rest of the day, right? Just a very interesting thing. So this one's interesting. Yeah, so this is a liquidity area right through here. All of this right here. And the market came up to that, basically right at the London Open, attacked it. And as soon as it attacked it, it was gone. Yeah. So just interesting stuff. Anyway, you could do this you could literally go back and back test this. Anyway, this indicator it's just called kill zones. Let's see, is there other information about it? Kill zones. Who made this? Can I see the author? Because there's a lot of people who use the kill zone indicator. So I just set it up so that the Asian session is from 1700 hours to 2 a.m. GMT. And then basically, and I'm also using the sessions indicator right here. And I'm just showing the Sydney session. That's all I'm showing. So basically the dark blue is showing me the Sydney session overall. And then the kill zone is highlighting it in this light blue, the highs and the lows of Sydney. And then my job is to basically find liquidity that the London session will probably attack while we're sleeping. So this is literally like the perfect system for somebody who has a job full time that wants to make a truckload of money. because like while they're working a job, because this is something like you can analyze this during Sydney, as Sydney is starting to wrap up before you go to bed, and then you just plug in the trade at liquidity. But one other thing too, guys, one other thing I like to do, for example, like if this, so you've got this USD franc coming down right here. So normally I'm going to be looking for sells if the market's pushing down, right? So I'd be looking for liquidity zones um, for my sell, right? So there's a couple of places I can already see, like right here, a lot of different places you could do this. Like this is technically a liquidity right there, and this is another liquidity zone right here. And then you've got within side of Sydney, I would argue that this was liquidity right through here even. So there's a couple, and you can use like the order block detector. So for example, if I rewind, can I jump to? Yeah, so if I jump to here and then I pull up the order block detector, sometimes this will tell you where, yeah, I guess there's order blocks up here on the 15-minute. I'd have to go to a different time frame to find some more. But I guess what I'm saying is you let this market go, do its thing. There's a couple of places where this thing comes back up and tries to attack these two levels up here. So yeah, it attacks that and then it starts to pull back. And let's see, I think it tries to attack it again. But now you're into a new day. So, which is another thing too, guys. Like I had a few people ask me this. When you're trading with me, and you're taking signals, my signals are intended to be used within 24 hours. So if they do not trigger within 24 hours, just cancel the pending order. Like if you have a pending order that just has never triggered, just go ahead and cancel it. Or if you want to confirm with me, just send me a text message. Hey, Steve, are you still holding this trade? And then I'll get back to you. But in general, the trades are supposed to execute within 24 hours generally. Unless I explicitly say in a webinar, like, hey, this one might take several days to trigger, which sometimes happens. But yeah, I don't typically, I'm always looking for new trades every day. So if something doesn't trigger, we'll just move on to the next trade because it obviously never triggered, right? So just something to keep in mind. And then also just never don't hesitate to ask me. Just shoot me a text message or an email just saying, hey Steve, here's what I've got open right now. Here's my trades. Or do you still have these open? That's totally fine. And I'm totally happy to do that. But again, like feel free to manage your own portfolio. Like you can, if you feel like it's a trade you don't want anymore, feel free to take it off, even if I have it. But I do want you guys to at some point really take initiative over your own portfolios, right? So, but again, I'm not ever going to turn you away if you ever come and ask me for help. No way, never. I'm going to do that. So, okay, so that's in general. Let me show you last night on Let's exit this and let's go to the euro dollar. So this one did not trigger in the program, and although it was a great stinking trade. So basically last night, let's actually delete actually no, I'll leave this open. So a couple of things I really liked about this euro dollar trade. First of all, it had what you want to see, right? One, you've got structure right through here, right? Why is this structure? You've got multiple places of confluence, right? This is resistance over here. This is resistance over here. You've got resistance right here. And then ultimately the market broke the structure. So you've got a BOS, break of structure, right there. That's where it happened. So when that happens, you got a shift in the market. And now the question is, who caused it? Who is the person in charge, right? And there were several different places you could have done this, but I think my area was really, really great. I just never got triggered in as far as a signals program goes, right? So let's zoom in. So basically where the market was last night during Sydney when I posted this is it was right about here. Okay. So this is where the market was, and I saw all of this pre-market. I saw the structure, the break of structure, and I said, okay, who caused this? So initially you could say, well, maybe this caused it, like whatever liquidity is in here. And yeah, obviously in hindsight, that was the one that held and that's the one that worked out. But when I threw up my order block detector indicator, I'm surprised it's not showing up there. Let's try an hourly time frame. There it is. Okay, so this thing just lit up right here. Absolutely lit up. So I had a ton of order blocks just right gathered up in this area. You can see I've got like 1, 2, 3 different order blocks inside here, all those green blocks. So to me, I said, okay, well, that's definitely liquidity. That's definitely a zone I'd like to be buying in. And so I said to myself, okay, great. I got kind of a tight consolidation in Sydney. I think it's going to come and attack this liquidity and then just go up from there during London. So I said, that's a trade I'd be willing to take while I'm sleeping. So it literally, well, let's see, it just went straight up, right? Like we knew the direction we wanted it to go. We wanted it to go up, but it just went up so quickly. Yeah, it just went up very, very quickly. So yeah, the only thing I think I could have done better is just, like as a program, we could have entered just at market rather than waiting for it to come down to here. If it's a good enough trade, might as well go ahead and just take the trade. So yeah, so you can go ahead and delete the pending order on this one, Roger, because the trade is already taken off. Yeah, it's just gone to the upside. So no need to keep that buy down here anymore because it's gone, right? But that's the idea is a lot of the times why I post trades at night is because everything's quiet during Sydney and Tokyo, right? Especially the euro pairs, pound pairs, CAD, dollar, um, franc. They're really quiet, right? So if I can find a quiet currency pair that has liquidity nearby, there's a good chance we're going to break out of that zone, the Asian session kill zone, and the market's probably going to attack liquidity. On this one, it did not attack it the way I wanted it to attack last night. So again, that sometimes that happens, right? But nothing I really could have done differently other than just getting us as a program into this trade sooner. Otherwise, it was great. Literally had everything you wanted. Break structure, return back to the liquidity. Yeah. And then I just figured that I wanted it to come and dip into this first, and then I wanted it to just break up from there. So, and that's going to happen. And that's also another side effect of the type of trading that I do. So obviously I'm going to have a lot of trades that sometimes just they just never trigger. And that's just one of the side effects of how I trade, because I demand that the market gives me a solid risk to reward ratio. And if I'm not going to get that risk to reward ratio, then I don't want to trade, right? So I do demand that from the market because I used to trade the other way, the alternative to that, where you just take every single trade, you get your risk management ratio goes upside down, right? I've been that guy. I've definitely been that guy before, and I don't trade that way. So the problem is that a lot of us just come from these backgrounds of trading that way, and it's a really hard learning curve to be able to learn to trade this way. because you are going to miss trades. Like as a program, we missed this one. Like I had a pending order right there that never triggered. And it kind of stinks because, you did your analysis correctly. Like obviously this was going to be a great trade, but it just never triggers. But that is just like it happens. It just happens, and it's something we have to deal with. Um, yeah, there's not much else to say other than it's something we have to deal with, because the alternative is you take a lot of trades that just don't work out, right? So anyway, this good setup though, and I do want to highlight it though, because I know sometimes every trader's in different categories. Like I have traders right now that are doing really, really well, that are, excelling and doing great. And I have other traders that are not doing that great, right? Um, and so like I want you guys to look at this and see the power in what we're doing, even if it didn't trigger, just because I want you to just be able to I want you to be able to look at this and say, hey, there is something there. There's definitely something to this. Um, now it's just a matter of getting us into some of these trades. So, and on another thing too that I do, by the way, I've shared this with you guys too in the past. So like let me give you an example with this USD franc trade. So last night I took multiple trades. So I took multiple positions, and I want to show you something here that I think will really help a lot of you guys kind of learn what I'm doing. So when I took this trade last night, let me just, and I already went through this one, but let me show you something that I do. So when I like a setup like this, and I'm pretty confident with the direction it's going to go, what I like to do is I like to have my greedy entry and my more conservative entry. So if I feel like I'm already at liquidity, which I pretty much was last night, like this whole area was like liquidity, right? I guess this whole area was. No, it was, I had it labeled like this. Yeah. And I even included this up here. Come on. Yeah, I had it up more. There we go. Okay. So what I'll do is a lot of times, I had obviously our signal right up here on that guy, that triggered short. And that's the more, I guess it sounds aggressive, but it's actually a conservative entry. It's conservative because your entry is further away from the market. Okay. But if you like this trade enough to just go ahead and take it, you can go ahead and just take the entry. And that's what I did. So I literally just took another position at market last night, which was about right here when I sent out the signal. And there's a couple ways you can do this. You can put your stop loss just right at your original stop loss on all your trades like that. And then you can still target the same area, wherever that is. I can't remember where it was. Let's move these up just a little. And you can target both. So you'll make a little bit less on the one that has a more aggressive entry. So the one that you get in now, that's aggressive. And the one that could potentially trigger later, that's a little more conservative, but it has a much greater potential to make even more money. So that's another way you can trade these. So I'm trying to give you other ways you can get into the market. One of the cool things about doing it this way is it does allow for that satisfaction of being in the market, because we have this insatiable desire to just want to be in the market all the time. To, which I don't know about, guys. Like for me as a trader, I feel like for me, if I have a trade like this that triggers while I'm sleeping and it's only active for 3 or 4 hours, when I wake up in the morning it's closed or about closed, that's great. Like I'm totally content with that. If I just have 3 or 4 trades a week like that, where I'm only in the market for a total of like, we'll say 9 hours, a total of 9 hours in a week, maybe that's all I needed. Or maybe I'm in the market for 3 hours a week. Because the trade triggers quickly and hits the take profit or the stop loss quickly. That's all we want. So for me, that's I'm content with that. I don't feel like I need to be in the market all day long every single day. Yeah, I don't feel like I need that. All right, guys. So there's those two trades. Let's see. As far as other trades, let me look at my account here. Um, so yeah, let me cancel my euro dollar um buy limit because that one never triggered. And then the other trade I have going on is just the euro CAD short. Let's go take a look at that. That one's kind of a longer term trade, but this one I do have open right now. Looks like it's had quite the improvement here. Oh yeah, was this the trade? Yeah, this was this trade, wasn't it? Yeah. So it had, if I remember, quite a few. Yeah, it had an order block right up in there. Yep, this is the one. Okay. Yep. So the zero CAD's been moving up and up and up, right? We talked about this the other day, so it's been going up and up and up and up. So this is, and by the way, this is the only other trade I have open right now. This is it. Okay. So just in case anybody was confused or had different orders open, like this is the only other trade I have open. So with this one, we have a congregation of order blocks all stacked up in here, right? Tons of order blocks, and it's across multiple time frames. And how do we know this? Well, one, you can use the cheat, and it's not really a cheat. I should stop calling it a cheat, like the training wheels or whatever, but you can use these indicators to help you find order blocks. So I like this one, order block detector from Luxalgo. You can use that. So it kind of puts a footprint in the market right here for you to see that information beforehand. But you can also just go back in time, right? If you go back over here, you can manually find this. So here's the liquidity that we're looking at. So basically, if you want to break down this area, here's what's going on. So you had, first of all, this right here. You had a nice structure point right through this general area. So this was structure, it acted as some resistance there. It acted as some resistance here. It acted as kind of some resistance right through here, obviously right there. It acted as support right here, and it acted as support. So that's structure, right? You also have another structure point over here, several different structure points. I would argue that this thing broke a structure point right here. This was structure, and the market broke it right there. And then I would also argue that this was structure right through here. So you've got this as resistance and this as support and this as support as well. So, and the market broke that structure there. So you have those two breaks and you have another break of structure right here. Okay, so you've got multiple breaks of structure, and now we need to find out who created this break of structure. So let's start with this one over here. So over here, we have a break of structure that was caused by honestly, whatever activity took place up in this general area, like right here. In fact, let me break this down. Yeah, whatever took place here. Sorry, guys. Come on, where'd you go? Gotta go back to it. Here it is. Okay. Yeah, whatever took place in here ultimately created this break of structure right here. Okay. And yeah, whatever orders were in here, whatever they were doing right in here created that. So that's one area where there's liquidity. Okay. I hope that makes sense. I really do. Like, it's just a congregation. That's all you're looking for, is a congregation of candlesticks that a congregation of candlesticks that ultimately have a large impulse that, I guess, ultimately breaks structure, which happened here. And your job, my job, is to just, on anything we do, literally every currency pair you look at on any time frame, is to find this. What doesn't matter if you're trading stocks, it doesn't matter if you're trading Forex, it doesn't matter. Literally anything that trades is to find this, okay? And its relationship to the break of structure. That's all your job is. You can literally do this. I know people that do this like on macro scales. Like you can time the real estate market doing this exact same thing. Just pull up a chart of real estate and literally go back and try to find these liquidity zones. Um, um, and see if the market's ever coming back to approach one of these areas, whether that's on the buy side or sell side. There's a lot of things you can do to kind of predict the markets this way. Okay. All right, so that's one area. Now, if you go back, we drew out some other break structures over here. So you have this structure break and this structure break over here. So this one, you're looking for kind of like what created this. Now, this one, I guess you could argue this was a little bit of something right here that created this break. But ultimately, I do think that whatever took place up in these areas had a lot to do with this break of structure. Like whatever sells to, like, look how big this candlestick to the downside is. Like whatever they did up in here, they said enough is enough, we're selling this now, right? They did it right here. And ultimately, whatever orders, I guess you could congregate this whole area and say whatever took place in here ultimately led to this, whatever. Yeah, that's a huge break. Okay, and it's whatever happened up in here is liquidity. So now you fast forward and you see the market now. We go back to where the market is, and yep, this whole area is liquidity right here. Okay, now, and you can confirm this with the order block indicators. So order blocks are saying that this is liquidity up here. I guess mine's a little early. I've been a little bit early to this. And technically the market's now right. This is where the market is. It's right there. But this, why does it keep doing that? This whole thing is sell liquidity. Okay, so we're in a massive institutional selling area. And that's why I sent out this signal to just sell at market yesterday. So I'm actually down on this trade just a little bit. I'm down $170 on the trade. I only did a 0.27 contract because I am looking for a lot of pips on this move. But yeah, there's just a ton of sell liquidity up in here, and you can find this either manually or you can use an indicator. I like to do both. You guys have seen me do both. That's how I do it. I look for both. I try to find what's creating liquidity, like what created breaks of structure, and then I go find it on my own. And then I like to confirm it with the order block detector, and that's how you find liquidity. Okay. So I guess ideally I should have waited since I knew that this area up here was also liquidity. I guess I could have just ideally, for example, let me delete all this. I could have just said, hey, let's just wait for it to come up into here and then we'll go after it. Because that looks like it would have been the best area. Yeah, that was a really good area to sell. Dang. Oh, well. I mean, I'm still in it, but it looks like I had a much better area to sell right up there. Okay, that's how you kind of find the tops and the bottoms of the market. If there's any way you can find the top of the market and the bottom of the market, it's doing this process. Okay, going back, finding what broke structure, or I guess finding structure first, finding if that structure has broken. If it has broken, go find put on your detective hat and find out who created it. And you can either find it on your own or you can use an order block detector. Here's a challenge for those of you that are kind of new to trading. What I would recommend that you do is throw up on your TradingView platform the order block detector from LuxAlgo. Try any time frame or multiple time frames. Turn it on and go find if it says this is supply liquidity and it's red, or it's demand liquidity and it's green, go find out, go back in time to where it originated and ask yourself, why is it liquidity, right? If you ask yourself why it's liquidity, I think that will help you a ton. All right. Okay, so yeah, I think that's a good exercise. Just go ask yourself, why is that liquidity? start asking those questions. That'll help you a ton. All right, guys. So my plan today is I'm going to kind of take it easy with the signals this afternoon. I'm going to look for more signals tonight. So plan on more signals tonight that we can take together. If you want to find your own trades and you want to send them to me, feel free to send those setups to me and I'd be more than happy to analyze those with you. But yeah, tonight I'll be sending out some more trades. So lastly, I have a thing that I forgot about tonight. I have to cancel the COT report tonight, so I won't be there. Unfortunately for the COT report tonight. So just an FYI, that I can't do it tonight. I'll see if I can reschedule it. I might be able to do it tomorrow. I need to check my calendar, but yeah, I can't do COT report tonight, so I apologize about that. All right, guys. Oh, and Roger, awesome job writing up the EuroCAD. So you kind of got like two signals in one, writing up the EuroCAD up to liquidity and then writing it down. Nice work. That's awesome. All right, guys. Appreciate your attendance today. Thank you for coming, and we will see you in the next webinar.